Institute of Banking and Finance, or IBF, was established to foster and develop the professional competencies of the financial sector. IBF is dedicated to empowering practitioners with capabilities to support the growth of the Asian financial industry. It is the national accreditation and certification agency for financial sector competency. Developed by the industry for the industry, IBF Standards is a set of competency standards benchmarked to international best practices. IBF's vision is to be the Asian standard of excellence for practitioners in finance. IBF Standards covers 13 industry segments and offers a wide range of development roadmaps. IBF Standards offers accredited programs to guide a financial practitioner from licensing examinations to professional certification. IBF Standards certifies financial practitioners at 3 levels. An IBF qualified individual is one who is equipped with a broad base of capabilities and foundational competencies to undertake new roles. An IBF advanced individual is one who has acquired applied knowledge and complex analytical skills for specialists or leadership functions. An IBF Fellow is an industry veteran who has demonstrated professional mastery and exemplifies thought leadership and commitment to industry. The IBF certification mark, a set of parallel elevation bars, symbolizes the close partnership between IBF and the industry. IBF certification is therefore an industry-endorsed mark of quality that recognizes individuals who exhibit professional excellence, integrity, and commitment to the industry. Be part of the IBF community of certified financial practitioners. Participate in continuing professional development programs. Avail yourself to learning resources to plan your career. There are also opportunities for mentoring and networking. IBF, the Asian Standard of Excellence for Practitioners in Finance.
Hi, good day. My name is Kotong and I just attended MIW. Okay, the key things I took away actually is two things. One is a framework to actually use fundamental analysis and technical analysis and how to synergize them together such that you can actually look for value stocks and for you actually to catch on the opportunities for the shares actually trending higher or lower. And the second thing that I learned is not a lot of other courses in all those other big courses will actually offer you is actually position sizing, because in this case most of the investors will try to jump into a position right away after a jump out with an entire position out in this case. What Jane actually taught us is actually to do it in sizes such that you can actually catch on your opportunities and as well as allowing another portion of your investment to actually to ride onto the trend itself. And this can actually eliminate the psychological biases that most investors will actually fall into it. So therefore, based on these two key learning lessons, I would highly recommend you to actually take in MIW. Thank you.
So when I came upon this topic on called behavioral finance, I started to realize that the crux of a successful investor or trader is not about selecting stock. It's about managing the portfolio of stocks they own. We manage the risk. Not only just managing the risk, we also manage the psychology of ourselves. The only best way to service to a client is really through a standard process, guidelines, and also to understand what the client really need and ultimately end of the day. And this will generally help clients not only to provide the best service for clients, but also to help clients to gain wisdom, knowledge, and getting the best investment decision for themselves. So that this is what I do normally. The perfect strategy to me is a unique strategy that fits to the person's objective and wants.
During this class, Jay actually shared a lot of his personal experience and made certain concepts very clear to me. Like what is a trend, what is a momentum, causes actually helped me to understand the technical analysis and also the fundamental side.
He's able to convey very effectively the substance and the knowledge. I find him very pragmatic and his approach is very prudent.
Join my course and learn how to make your investment work for you today.
2023 was a challenging one for real estate investment trusts due to the heightened interest rates and the expectations of higher and longer rates. Higher interest rates would lead to higher borrowing costs, lower property valuation, and potentially lower distributions for REITs, which makes it less attractive. S-REIT's sector saw one of its best months in 3 years in November, gaining 7.4% in total returns. The U.S. Federal Reserve kept interest rates steady for the third time in its year-end meeting on December 13. Investors are now expecting future rate cuts in the coming years. Following the meeting, the IHS REITs index gained 3.8% across the December 14th trading session. This brought its December month-to-date total returns to 7.1%, with year-to-date total returns at 4.7%. The top 3 performers in December month-to-date are Prime US REITs, Manulife US REITs, and Keppel Pacific Oak US REITs, averaging 45.2% total returns. On top of that, 3 trusts with significant data center exposure all saw double-digit gains this year. They are Mapletree Industrial Trust's 16.6% year-to-date total returns, Capitaland Ascendas REIT's 15.4%, and Capitaland India Trust 10.4%. 17 S-REITs have seen a drop in gearing ratio since the end of 2021, averaging a 3% point drop. Currently, 26 S-REITs maintain gearing ratios below 40%. Scan or click the link in the description to learn more about these stocks or join SGX Invest on Telegram for the latest news update. Please note this is a general commentary of historical performance and not necessarily indicative of future performance. Check out our investment courses that are up to 70% subsidized at cyberquote.com/sg or contact us at support@cyberquote.com.sg.
Hey, a very good evening, ladies and gentlemen. Thank you for tuning in for this Tuesday evening webinar session by Jay Chia, Wealth Manager. The webinar title, Investing for the Newbies. Jay Chia, as you can see on the slide, is a wealth manager from Phillip Securities. I think this year will be stepping into his 18 years, right? And also the IBF accredited trainer who provided one of the course, Making Investment Work course. I think earlier on we played the video. That course itself is can get up to the course fee subsidy 70% by IBF Institute Banking and Finance. And it's also the associate trainer with CyberCode since easily more than 10 years, right? Okay. In fact, he's one of the pioneer of this trainer with CyberCode. Now, do allow me to do a short introduction of our company as well as this our keynote speaker today, Jay Chia. And of course, thank you very much for taking your time to join in, for those who join from Zoom as well as those who join in via Facebook Live. Thank you very much. Now, of course, CyberCode, we start off our business since 1996. So for those who have been following through with us, more or less get to know, we do provide financial investment courses to the retail individual. And of course, last close to 4 years when this COVID pandemic hit Singapore. And we have also garnered, we are quite proud to say that we have garnered one of the highest number of the IBF accreditation courses in Singapore, right? So one of the courses is Making Investment Work course, which is directly taught by our wealth manager, Jay Chia, will be shared towards the end of session. So I'm strongly urge all of you stay tuned to the end of session. Myself and Jay definitely going to share you how can you benefit from this course. Now, of course, that is for the company CyberCode side, right? Now, also talk about a little bit of keynote speaker today, Jay Chia. Now, as you can see on the screen, I think Jay this year will be stepping into his 16 years, if I'm not wrong, or if not, it'll be 17 years. So he start off, in fact, before he start off as a join Philip as a stockbroker, I think he's graduate as an engineer, right? Of course, he have passion. Who decided to join Phillip Security, I think 16 years back. So when the moment he start off as a trader, right, I think the first 2 or 3 years, then throughout the year, he find out that he's more suitable geared towards into investing. And therefore, after that, at the number 4th or 5th year, he decided to shift his portfolio into the investing. And therefore, over the time, he developed investment. Making Investment Work course. Now, Jay basically he believes using both fundamental and technical to form his market insight. Okay, which is not many trainers and speakers in Singapore do that. So Jay Chia, our wealth manager, have these talents on do that. So I think this 2-hour session, please maximize this 2 hour session to ask as much possible question from Jay, right? So he also, because he using this both fundamental and TA to form his market insight, he's also one of the very individual who also teaching on some behavioral finance, some sort of like a psychology in the investing also, which is actually blending into his investment journal. So I think this is something that we can learn from Jay Chia, our wealth manager, right? Now, indeed, 2 hour short 2 hour session, we want to make it more interactive. So if you do have any question for those who join via Zoom, you can post your question into the Q&A or chat, or for those who join via this Facebook Live, yeah, we are more than welcome to post your question in comments column. So in appropriate time, myself or Jay or my colleague Pat Ann can provide you the reply, right? Please stay tuned to the end of the session. So I'll pass the mic over to Jay. Jay, please.
Yes, thank you, Andy, for the introduction.
Yeah.
A very good evening to everyone. Thank you for joining me in today's evening session on the basic, the new investing for newbies. Yes, indeed, this is a very interesting topic, especially for those who are very new to the stock market. And very often, a lot of my clients are also very new to the stock market, and they would like to ask me very simple questions, especially the most famous question that people always ask, Jay, what is the shares that I should be investing in? But before I can really answer such question, I think it's really very important for me to understand whether my client or people who speak to me, they are really understanding what investment is all about. So that's why in today's session, I want to make use of today's session to teach those who are really new in the market, or maybe you may be a veteran in the market. Guess what? Sometimes you may not know the full thing about the real meaning of certain definitions or certain terms to use in the market. So in today's session, I'm going to share more than 17 years, I think coming to the 18 years in the industry. Really, there's a lot of terms that we need to understand, especially for those who are really, really new to the market. So it can be very mind-boggling for people who are new, but yet in today's session, I'm going to break it down to simplify as simple as possible for everyone to do so. And being in Phillip Capital for so many years, I'm very thankful that through many sessions or even in Cybercode, like what Andy has shared for so many years in Cybercode, I really have conversed to many people. But it's really impossible to teach all my years of experience in investing in stock market to help everyone to understand fully. The best way is to go through a systematic process of learning. That means to go through a training course itself. So in making investment course, like the name portray, I want to help people to learn how to make the investment work for them, not the other way around, where they will think that they think that to make money from stock market, they have to trade the market. Not necessary. We must know how to make our investment work for us. And I'm very thankful that IBF has also accredited this making investment course, because with IBF accreditation, this marks that whatever I'm teaching and training is not just based on my personal experience over the years, but it's also based on what market practitioners are using. And this definitely opened doors for me to train people who are new into this profession, and this will give them a very strong foundation in order for them to advise their clients properly. So rest be assured, once you sign up for making investment course, you will get this assurance that what you are learning is beyond what many providers in the market is giving. So before I want to talk about what are information that the newbies in investing need to know, I think it's very important for me to go through some very simple disclaimer and limitation so as to set the tone for tonight's session itself. First, I may be talking about some stocks based on past performances. Please to take note that past performance may not be the best indication of future performance. As far as possible, when data are used, especially later, I may want to draw some examples. Please to take note that this example does not portray an advice to buy or sell any stocks that I shared. And I will be focusing on Singapore market because investing is such a vast universe. So many things that we can invest in, but eventually we have to learn how to focus
in the right kind of stocks to invest in. So therefore, to reduce the focus, we'll be talking about Singapore stock market. And if you want to make any investment decision after tonight's talk, please don't take my word for it. Please do consider your own risk assessment, because God has made everyone to have different risk appetite. Lastly, I'll be talking about certain stocks I may or may not have invested position in the stock itself. But rest be assured, me priding myself as an investor, there are very high chance that I will have some invested positions in it. So this is not a session for me to hype up everyone to buy certain share so that I can gain financial benefit, but this is a session to educate everyone, especially those who are new in the market, to be able to know how to understand what kind of foundation of investing they need to have. Okay, so these are the start off that I want to start off with the standard disclaimer and limitation. But let me frame the whole session by starting off with how do we build an investing framework. Now, investing is not just simply you got money, you choose a share, you buy, and that's it. You have invested into the market. But we need to have the right kind of building block, right kind of foundation before we're able to know what kind of investment strategies that will be suitable for us. So very often, those investors who are really new in the market, they will surely ask this question like what I shared early on. Jay, what should I invest in? I think certainly those who come in to listen and talk, definitely there was this expectation. What can I find any stocks that invest in after listening to this talk? I think it's fair enough. Those who are new or those who have been in the market for a while, and even Jay, I myself, I also constantly will have this thought, what should I invest in? That is a very natural question. But since this is something that everybody naturally will know, but I felt that the most crucial question that we need to learn as someone new in investment, the important question to ask is how to avoid costly losses. Now, in my investing journey and experiences with people, a lot of times, not just people come and ask me, hey, Jay, what should I invest in? But what is disheartening is when I hear people asking me, Jay, I bought this stock, what should I do with it? Or one dear friend of mine said, Jay, I have invested a lot of money into Alibaba shares. What should I do with it? It's very hard for me to answer this question. Why? Because very often when they ask this question means that most likely the shares that I invest in are actually incurring unrealized losses. What they hope to find is that they hope that they can hear something convincing or something that will encourage them to continue hold on their position. I'm afraid I have told my friend bluntly and said, why do you want to buy the share in the first place? I don't even think that that will be a good investment in the first place. It's not the kind of shares that I want to invest in. And of course, suddenly the face of my friend changed and he walked away from me. Well, that is really surprising for me. But why I want to share this example is because over the years, what I realized is this. Make money in the stock market is easy. You want to learn what are stocks to invest is easy. But the hardest part for most people is actually in losses situation. How do we handle losses situation? So I want to help to every individual who listen in today's session to understand how to build a proper foundation in the investment strategy in order to reduce the chances of losses. I repeat again, reduce the chances of losses. Once you reduce the chances of losses, whatever profit you have accumulated over time will certainly outweigh the losses that incurred in investment journey. This also means that there's no way to avoid losses in investment. So let's get started. What are the three types of stocks that we can think about investing in to kickstart in your investment journey? What are three types that is considered as a lower risk stock that's less risky for you to consider to build on? And these three types of stock must satisfy these few things. The building blocks of a strong portfolio, which I believe that over time I observe, usually they are the stocks that are of blue chips in nature, okay, blue chip stocks in nature, or even when you observe REITs, real estate investment trust, it can be also considered as a lower risk in nature. And lastly, the last type of stock that we can look into are the ETF, which stand for exchange traded fund. So in today's session, I'm going to break down into three parts. Part one, which will be talking about blue chip stocks. How do you understand what blue chip stock is? Part two, we'll learn what is REITs, especially those who are really new and keep on hearing that, hey, you should be investing in REITs. And lastly, of course, a good way of investment is to look into ETF, exchange traded funds. So these three portions, what I'm going to do is I'm going to help you to build strong understanding and foundation. Once you understand that, then before I end today's session, I'm going to share with you how are we going to use, from there, how are we going to develop investment strategy, through the investment strategy, develop into an investment portfolio. And especially, there's also a part of how to select blue chip stocks, real estate investment trusts, and ETF itself. Okay, so in any point in time, if you have any questions, please do use the Q&A session, the button, okay, to ask me questions. The more questions asked, the more information I'll share. If not, I will be just rattling off from what I prepare in the slides. Okay, it can be wordy, but more importantly is that you must absorb the information and know what are the things that you do not know. Okay. Now let's start off with the blue chip stocks. Let's learn how to understand what constitute blue chip stocks. So what is a blue chip stock? Very interestingly, this term has been floating in the market for a very, very long time. But how come stocks got blue chip? Is it a stock name or what? Now, I just want to share some fun fact. How come people like us, professionals, we like to use this term blue chip? So some little fun fact, which I went to do a little bit research to help everybody understand. And those who are watching the market, actually you can use this to impress your friend. Now, the term blue chip was used during 1923, 100 years ago, okay? 100 plus years ago, this term blue chip stock has already been used by this guy called Oliver Gingo, an employee of Dow Jones. Dow Jones Industrial Average. Dow Jones Industrial Average is an index that is in the market for more than 100 plus years. So Oliver Gingo, who is an employee of Dow Jones, he used this term blue chip. Why? He want to use this term blue chip so as to help him to easily describe shares that are traded above $200 in the US market. Shares above $200. Of course, in Singapore, we haven't seen any share that has traded more than $200. But in US context, because there are so many shares and stocks and shares to choose from, so Oliver, he want to use this term blue chip to simplify the process of that. He's talking about stocks that are trading above $200. And not only that, he also want to relate this to something that people can associate with. Sad to say, many people associate the stock market as a casino. So he used this term blue chip with association to a game called poker. And in the game poker, there are different type of poker chips that is available, ranging from blue, white, and red color. So, like the term, you see blue, white, and red color, what does it mean? Different color has different value representation. So the blue chip stock has the highest value representation. So we see this association, it's very easy for people to understand that, oh, when we talk about blue chip stock, means that these are stocks that are of high value. Okay, I repeat again, when we talk about blue chip stock, simply it means that it is stocks of high value. But of course, over time, the term blue chip has been widely been used and then rightly been modified. So it's not just stocks that are trading above 200. And if you use this as a foundation, you say Singapore doesn't have any blue chip stocks. No, it doesn't mean that. So what really is a blue chip stock? What it can be defined is that it can be defined this way. A blue chip company is either a national or international recognized company that is well established and financially sound company that is traded publicly. Okay, so this is a very clear definition. So usually what is being known for blue chip companies is that they usually sell high quality or even widely accepted products and services. That is very common. And this company usually have also very reputable brands, okay, that are built and maintained over many years. The keyword is actually many years. But importantly, what's the most important thing when you want to invest in shares is that the company must be profitable. Blue chip stock not only must be profitable, but it must be profitable during adverse economic condition. There are a lot of companies, like even during COVID-19 situation, these companies are able to continue grow and be profitable during adverse economic situation, even up till now, where we are seeing some possibility in recession in the economy. And what is really also important is that it must have long records of stable and reliable growth. So these are the characteristics, and these are very clear definition on what blue chip stock is. It is very qualitative in nature, but can we quantify them? Possible. We can actually quantify them by like what Mr. Oliver has said, $200 above. But let us go a little bit deeper. How does it work? What's the character of it in different market situation, or how does it look like in the market itself? Usually blue chip stock usually have very large market capitalization. What do I mean by market capitalization? Means that it has a large base of shares multiplied by the share price. Okay, it can either be very high in share price, or it can be have very high traded shares that is in the market itself. Okay, so the formula of market cap is price multiplied by number of issued share. Very simply, just like that. So in Singapore, the big market capitalization is in billions in dollars. And the second characteristic is that it is usually less volatile in price movement. Okay, this company's prices usually are less volatile because people are more confident on the company prospect itself. And more importantly, it must be also liquid. What do I mean defined by liquid? Liquid means that if you want to buy or sell the share, there will be available high amount of people who are very willing to buy or very willing to sell to you. This is what I mean by liquidity, okay, at any moment in time in the market. So they are pretty often frequently being traded in the market because they are popular, they are blue chip stock, they are stable in their earnings, especially, meaning they must have strong balance sheet fundamentals. And not only that, there are also a lot of analysts wanting to analyze these companies because these are companies that have very strong base and also very low risk. So therefore, many analysts who, when they analyze the company, they will give very strong credit rating, meaning banks will be more than willing to lend them money because the scale of the company size is really very big. And in terms of financial numbers, okay, usually they will have very stable returns in terms of financial ratios like ROE, ROA, or even some of them may have very low debt level. So when they have very stable returns plus low debt level, this gives a strong assurance that this company can go through any future turmoil or adversities. Okay, and another characteristic is that usually blue chip stock usually pay stable or even rising dividends. Okay, so as you can see over here, these are the norm, that means the characteristic that how we define a blue chip stock to be defined. Okay, you may not need to have all of them 100% to be checked, but majority of them are being checked. It can be considered as a blue chip stock itself. Okay, so these are some requirements before we talk about whether it is a blue chip in nature. Now, so now we understand what is a blue chip stock. Now, then we talk about why should we invest in the blue chip stock. And of course, every investment comes with a risk. We need to talk about the pro and also the cons of investing in blue chip stock. Now, the advantage of investing in blue chip stock is that definitely when you invest in blue chip stock, it has a longer horizon kind of stability. So with that, it offers lower risk comparing to other kind of stocks and even offer lower volatility. Okay, majority of other stocks may be subjected to very quick price changes. But I think what is really most important for every investor is this. We want to invest in company that is predictable, that is reliable, that can give us consistency over time. So therefore, blue chip stock generally provides reliable return, and also more importantly, as an investor, we want to be rewarded through dividends payout itself. So that's the advantage of investing in blue chip stocks. But on the other hand, blue chip stock generally, when you compare to other less established company, their room for growth is actually lesser. Okay, because they have so many years of track record, long years of track record, and they have already established a business scale to be a very large scale. So this also means that the margin of growth for this kind of company usually is lesser. So margin of growth when it's lesser means that the returns, if you expect high returns from investing in this kind of blue chip stock, the rate of return is going to be definitely lower than those less established company, because less established company will have a bigger pie or a bigger opportunity in the market to be able to establish more room for growth. And I think one of the things that really put off a lot of people from investing in blue chip stock is that the price. Okay, like for example, DBS is now $30 over, 30, 33, $34 range to buy 100 shares. If you just buy only 100 shares of DBS itself, it's going to cost you $3,400. Okay, majority of people could afford $3,400, but when you buy 1,000 shares, it's very unlikely that you can see a huge difference in the share price itself. So therefore, very often a lot of people want to buy 1,000 shares of DBS, which can cost $34,000. Just only 1,000 shares. So this is what I mean that is usually pricier. And then why is pricier is because of the stability the company provide, because of low risk in nature. And don't forget, when it's low risk in nature, this also come with expectation of lower return. So low risk, low reward, high risk, high reward. That is a norm that is happening in the market itself. Okay, so I hope you understand the reasons of why I want to talk about blue chips. There is clearly very good advantage, but of course, if it does not help people who want to trade and make good amount of money from it, it's not going to help. Okay, or for people who don't have large investment capital itself. But if you think that, okay, I need to really set aside of money to be prepared to buy into blue chip stock, then that's where now we will come to learn how to identify a blue chip stock. Now, just now, whatever I'm sharing are all very qualitative in nature, is just a very vague kind of identification. But now I want to go in deeper to help you all to quantify it. Okay, how to quantify it? There are certain characteristics that we can look at. First, we can look at it as a component of the market index. Okay, usually blue chip stocks are being, because of the large market capitalization size, it usually will be selected to be part of the index component. So in Singapore, STI is our index, Straits Times Index is our index, and DBS is one of the largest component or one of the largest weightage in STI itself. So therefore, when you see the index drop, like today when the index start dropping, most likely you will see DBS share price has been dropping also. And yes, like what I shared earlier on, the substantial size of market capitalization. So in general, majority of them will be at least 1 million mark itself. Okay, at least a 1 million mark. And not only that, it is also very reputable, okay, and easily recognized. Of course, DBS, everybody recognize DBS in Singapore or even some parts of Asia. There is also DBS. Even surprisingly, when I go to Malaysia or even go to Cambodia, Thailand, some of them say, hey, I have an account with DBS. Wow, that's interesting. So they are reputable. They can be in international scale itself. And usually they can be dominant leader in the industry. Okay, last time, like for example, last time Singtel is a dominant leader, but now of course there are competitors like StarHub, M1, or even now we have Simba Telco or TPG and so on and so forth. Okay, but I think most importantly, to really pick out the best way to really pick out blue chip stock is this. We look at the financial numbers. We look at their financial standings. How do I define financial standing? Number one, it must have a long track record. Track record of what? Track record of profitability. The company must have a track record of making money. Okay. And not only track record of making money, they must also be consistent in paying dividends. Because as an investor, our best reward is always through dividend income, because it can become a passive income for us. And not only that, especially in adverse market condition, like what we went through during COVID-19 situation, now we are going through a period of high inflation issues or high interest rate situation. It must help us to preserve our capital in the long run, meaning this company must have strong financial standing to pull through the adverse economic situation itself. Okay, so these are the characteristics of blue chip stocks. Later, I will show you how we can use some of the stock screener to screen out companies that have of such characteristic, how we can screen market capitalization, how we can screen companies that are profitable, and also companies that have dividend payments itself. All right. So before I move on to the next topic on understanding REITs, how to identify REITs, what is REITs, and so on and so forth, is there any questions? While I take a quick water break, if you have any questions, please use the Q&A button and ask me your questions. Then I will use the time to explain before I move on to the next section of tonight's talk. Okay, so I see no questions. I assume that I have been quite clear. I've been quite obvious in what in sharing with you all what is blue chip stock itself. But of course, in the meantime, if you suddenly have a question pop up, please to use the function And then at appropriate time, I will answer you. Okay, so let's start off with understanding REITs itself. So what is a REIT? A REIT stands for Real Estate Investment Trust. Okay, Real Estate Investment Trust. It is actually a form of trust that come in to own. Okay, a trust company that comes in to own and operate the income producing real estates or even some other related assets itself. So how they run the company is running under the model of mutual fund. Okay, mutual fund can be vaguely related or closely related to the term that we commonly use in Singapore. We call it unit trust. Okay, it means that this amount of money that is being put, when we talk about trust funds, we are talking about investor coming together and put a sum of money together to pool a capital to invest in something. So in this case, this capital is being used to invest in real estate. Real estate, meaning the properties. Okay, so they invest, and not only they invest, they employ people to operate the real estate itself. For example, okay, for example, Wisma Atrium. Wisma Atrium is part of Star Hill Global REIT itself. So Star Hill Global REIT, what they operate is that they operate not only just Wisma Atrium, they also own and operate Takashimaya also. So if you put your money and invest in Star Hill Global, you're actually literally investing in the building in Wisma Atrium and also Takashimaya. So the fund manager, what they will do is that they will manage the fund, not just manage the fund, they'll employ people to manage the two buildings. As a very simple example to help you to understand what is a trust to be is like and how it functions for a real estate investment trust. Now, unlike other real estate company, REITs does not develop real estate property. Instead, they buy. And when they buy, they use some of extra money to redevelop the property. And once they redevelop property, then they will start leasing out and renting out the retail spaces. One example is that the old Shaw House at Beach Road, Shaw House. Okay, the Shaw building is being bought by one of the REIT company, which also owns, suddenly I forgot the name. Okay, which also owns Somerset 313. Okay, so what they do is that they buy this very old building, they now tear it down. Okay, they redevelop the property at the Beach Road, and when they redevelop, once it's done, it become more new, more modern, then people will start going back into the estate, the commercial estate itself. So when people are going back, then they can rent out to people, retail shops to be running, or probably they may have developed some offices that is on top. They can rent out all these units, and then from there, they earn a rental income. And when they earn the rental income, what they'll do is that they will pass the rental income to the shareholders itself. That's how real estate investment trusts work. Now, why there are a lot of other mutual funds or even unit trusts, they are running in the same fashion like the REITs does. What really clearly differentiates REITs with the unit trust that deals with buying income producing properties is that REITs are listed in the stock exchange itself. So when it's been listed in the stock exchange, what it means that any single person who, as long as they have stock trading account, they will be able to have a chance to become a shareholder or the unit holder of this trust fund itself. For unit trust, if you want to buy a unit trust or a mutual fund, you need to wait for the trust manager to decide whether to decide or even to find another person to sell the person's fund for you. So it's not liquid in the nature. It will usually take a longer process when you are interested to buy the mutual fund. But for REITs itself, because it's listed in stock market, everybody are free to transact with each other. So when there is such freedom, means that anytime you need the money, you want to sell the REIT, you can sell it easily as long as you are agreeable with the price the buyer are buying. Or the other way around, if you want to buy into REITs, anytime you just look at the stock market quotation, stock market price of the REIT, you can just buy immediately. So that's the key difference of REIT and why REIT, a lot of people want to invest in REIT itself. Because one of the favorite hobby in Singapore is that people like to buy property. You see property prices has been on the high side. Okay, so instead of owning, you need to have a large amount of money to own one property. When you come together as a REIT, as a mutual fund or as a trust fund, everybody come together and pool their small amount of money. When everybody pool a small amount of money, they can actually buy a whole building itself. For example, like Wisma Atrium, okay, Takashima, Somerset 313, and so on and so forth. Okay, so that's how REITs operate, and this is the definition of REITs itself. So why you want to invest in REIT? Like I shared some reason and characteristic. First of all, the most attractive part of REITs and why a lot of people are talking about REITs is that if you invest in REITs, you can earn high dividend yield. Okay, a lot of people say REITs company pay high dividend. And why is it high dividend? The reason is very simple. Because this is running as a trust fund, okay, the trust fund just need to employ managers to manage and also do promotions to sell out the units of the property itself. Not sell, they don't sell the units. What they do is they rent out the spaces, okay, the property spaces. So when they rent out property spaces, of course, all these need time, need effort, and so forth. So if you're interested in investing in properties, if you do it yourself, you need to meet the tenant, go and collect rental from tenant, and if there's any certain issue in your property, you have to be down to go and handle the property issue and so forth. So it can be very cumbersome to do it by one person. But if you do it in a mutual fund or a trust fund kind of nature, you just need to employ a few person to help you run and manage not only just one property, you'll be managing a few properties. This will bring synergy, okay? This will bring cost saving over time, okay? So one of the advantage is that, you want to invest in property, no need to be really good at managing property. And not only that, when you talk about investing in property, many of us, when you invest in property, most of us can only afford one or probably two property the most. Why? Because of ABSD, all this coming in. And if we put our hard-earned money in one property or two property, and if one of the property is not going to perform well, it's going to greatly reduce our income or our potential in making more money. So therefore, if you want to be better off in different kind of market situation, the best way is to have diversification. So REITs, another characteristic is that it provides diversification within its real asset class. Of course, because of its fund mandate or trust mandate, they can only buy real estate assets within certain asset classes. Okay, but because of the consortium of money coming in, it allows an individual to own multiple real estate assets. Like for example, I quote you Starhill Global. Starhill Global, I'm a shareholder of the company. Okay, I've been a shareholder for 10 over years already. And I'm okay with being a shareholder. Why? Because Starhill Global pays me dividend regularly, and it also owns multiple assets within Orchard Road itself. And by going over to Orchard Road, we know the situation, the rental situation by walking around, and you can see it very clearly. So every time I can proudly tell my client, hey, say I'm a shareholder of this building, I'm a shareholder of that building. When I walk around, okay, I'm actually enjoying what I'm investing in itself. So that is one interesting about REIT. Another characteristic of REITs is that it offers high liquidity, just like how the blue chip work. Because of its popularity, a lot of people will want to invest and trade this company itself. So it's really easily traded. If you buy property yourself, if you want to sell a property, do you think you can sell? And not only just immediately you want to sell, can you see the price immediately, what kind of price you can sell? It's not as easy to get it. So when it's listed in stock market, it offers an avenue for easy transaction, easy way to get your money back quickly. And lastly, transparency. Now, what do I mean by transparency? When we want to look into blue chip companies, sometimes we need to understand the magnitude of the company, what kind of business it is doing. But very often in blue chip companies, their business model may not be so simple. They may be a multi-industry kind of company. For example, what Keppel Corp used to be, they are multi-industry. They got offshore marine, they got properties, they got even infrastructures like power plants and so on and so forth. So there are really multiple facade of industry. So it becomes very complicated, more complicated to understand the business model. But for REITs, it's really very straightforward. Just an example like Star Hill Global, it's very easy to evaluate. I just need to go down to shopping center, walk around to see the crowd, to go and see how many stores are being rented out, the units are being rented out, and if they are doing any promotions, people are shopping inside the stores. All these are very straightforward to evaluate and analyze. But if you invest in Keppel Corp, it's going to be very hard to measure because majority of assets, okay, some of the assets are inside Jurong Island, which is a restricted place where you can't even see. So these are the characteristic of REITs that we can understand that, hey, okay, it can be very attractive for people who are very attracted to be a part of investing in the property sector itself. So I think I shared some pros and cons. Okay, so let me reiterate the very simple things. I think the clear advantage of REITs comparing to other asset classes that is listed in the exchange is, number one, is really very liquid, especially for those stronger REITs or REITs that are doing well. And REITs also provide diversification, okay, diversification in terms of different properties that is being diversified. Some REITs are, of course, in the nature of overseas, okay, in overseas, properties are in overseas. So when the property in overseas, it can be as part of the overall portfolio to be diversified in terms of geographic location. And I think one very attractive thing that a lot of people really want to invest in REIT is because of their dividends. Generally, REITs provide very reliable dividend payout for investor itself. Okay, on average, for now, the REITs dividend yield are on the 5% side to 6%, as opposed to many blue chip stock. Most of blue chip stock are trading around the market yield rate, okay, the market risk-free rate, which is around 2 to 4% range. But for REITs, generally is slightly higher, 5%, 6%. Even there are some REITs that can go up to 7 or 8% dividend yield per year. So these are the of the advantage of investing in the REITs itself. But of course, there are also disadvantage in investing REIT. Because of such a consistent cash flow, a consistent dividend payout they give, usually they do not retain, okay, the REITs, they do not retain their profit. And when they don't retain their profit, when market opportunity arise, like for example, there are opportunity to buy very good or high income assets to invest in, they very often they cannot afford to fork out from their own pocket or own capital in the company. So the disadvantage is that when the REITs company, they want to expand their business, they need to raise fund or raise cash from the shareholders or even other interested parties. So this can create some risk, okay, some dilution in the shares itself if a shareholder. So you must be always ready to have some spare cash that if the company of the REITs want to expand a business, we must be ready to help them to expand. So this can cause the price to be lower in nature, okay, or because the company is find harder, lower chances to expand. So therefore, the growth of company can be much lower. Not only that, in order to buy big company, build buildings like commercial buildings or even residential buildings, they need to get money. So the money can get from shareholders or the market, the banks itself. So when you get from shareholders, of course, not all shareholders will be able to fork out the extra money to buy more shares of company. The best way to get easier access of money to finance their expansion is through borrowing money from banks. But the risk of borrowing money from banks is that if the interest rate increases, like for the past few years, the interest rate has been increasing, the REITs company suffer higher interest payment during this year. So when there's higher interest payment, this also can cause the profit of the company to be reduced drastically. When it's reduced, the dividend payout will also be reduced. And of course, in a high inflation environment, okay, management level or even transactional costs may cause the REIT company to face challenges in ever increasing manpower costs or even electricity bills and so on and so forth itself, or even renovation costs itself. So there are this kind of disadvantage that can happen within REIT, but generally speaking, in terms of transaction renovation costs, this can also affect other kind of companies also. So what is the key disadvantage of investing in REITs? Is number one, definitely because of its nature. When the company want to grow, they need to raise more fund to grow. Okay, so generally it will create lower growth rate. And of course, interest rate can be also a big factor, de facto, in causing the REITs performance to be reducing when the interest rate goes up. So that's why for the past few years, you will see the REITs company, okay, many of REITs prices are on the low side. And if you have came in earlier, you'll see that the video clip shared that early this year, the REITs has rebounded quite significantly. However, in the month of February, many of them start to came back down. Why? Because there are talks in the market saying that hey, the interest rate increase, the reduction of interest rate is unlikely to happen soon. It can be delayed. The economic situation is still not looking good, and so therefore there's reaction because of such situation and cause the share price of REITs to start dropping. Okay. So this is the characteristic of REITs, and this is the reason why people want to invest in REIT, but of course some are risk. But more importantly, is that REITs itself is also one big basket of different things to choose from. Okay, so I would like to break down for you guys to understand that in Singapore, what are the different categories of REITs that we can invest in? Why we want to know the different categories, so that you can know that we can play some thematic strategies, okay, towards a certain theme or certain sectors in the economy itself. So here are the different categories of REITs that I roughly categorize, okay, based on what I think it is best suited. So one of the most popular REITs that people like to invest in is what we call the commercial REITs. Okay, commercial REIT generally are the REITs that invest in office buildings or even industrial buildings or logistic buildings, warehouse, storage houses, and so on and so forth, or even infrastructure. Like why is it called commercial? Is because all these spaces, property spaces that they want to rent out, they want to lease out, is commercial in nature, meaning they want to deal with businesses, okay? Rent out offices to businesses, industrial spaces to businesses to manufacture things, logistic business to help them store their goods in order for transit to another places, or infrastructures like data centers, like power station, water treatment, and so on and so forth. Okay, so some examples that is listed in Singapore Exchange that classified under commercial REITs for office building is like OUE REIT, okay, industrial, like in the video clip earlier on, Maple Tree Industrial Trust, logistic, Maple Tree Logistic Trust, okay, infrastructure, Keppel Infrastructure Trust. So these are commercial in nature, meaning the target audience are targeting businesses itself. The next category of REITs is called the consumer REIT. I call them the consumer REIT, meaning although they can rent out spaces to businesses, but eventually this business is towards the consumer. Okay, and within consumer, we can talk about retail REIT like Starhill Global, where I shared early on, is a retail REIT itself, or even SPH REIT, which owns Paragon, and it's also a REIT itself. Or there are some REITs, there are hospitality REIT, like Fraser Hospitality Trust, CTL Hospitality Trust, where they rent out apartments, service apartments. Escort REIT is also one of them. Okay, CapitaLand Escort REIT, where they rent out and provide hospitality services. Or in fact, there are also REITs like First REIT, which actually rent out hospital, okay, for hospital business. That is a very special case. So this is what we call a consumer REIT, directed towards consumer itself. Okay, so very often it will be impacted by the consumer spending power or the consumer need in terms of hospitality. Like hospitality is always related to travel. Okay, retail can be related to travel, the travel numbers, and can also relate to the spending numbers in Singapore. Okay, as an individual. So that will be more targeted towards consumer per se. And of course, the last category, okay, I'm sorry about color, okay, the last category is called the others, okay. There's a category which I do not know how to classify them, but I'll classify them as others. Why? Because this category, they are very special kind of REITs. They don't really fully deal with real estate investment trusts, but they deal with some other special trusts, okay, like for example, ships, land. Okay, one of the very interesting REIT is called Arcadia Golf Trust. Okay, let me change the color out quickly. Okay. Okay, like Arcadia Golf Trust, how do they earn money? Is that they will rent out golfing services and so on and so forth. Okay, then through the golfing services, they will pass the earnings to the shareholders. Okay, or even shipping trusts. Okay, like FSL Trust, they own ships. They rent out the ships, and they rent out the ships for a very specific kind of business. They collect the rent. They also distribute it out. Okay, so it's something very similar. Or etc. For example, Asia Pay TV, also very interesting. They list out licensing right TV channels, TV frequency to do commercial paid TV kind of thing. Okay, so I classify them under others. Okay, it's very hard to put them into either commercial or consumer. Okay, because their asset is really very special. It's not really physical real estate trust. And of course, because they are special, usually it comes with higher risk now. So this kind of REITs, usually I have a tendency not to really invest in them, or not to avoid touching them, because they are very special. They are in another class of investment. So normally for me, I'll invest in commercial and also consumer REITs majority of the time. Okay, so to identify a REIT, I think the characteristic is really very straightforward. One of the key thing is that they pay out dividends, and generally most of them, they mandate themselves to pay out at least 90% or more of their profits to the shareholders as dividend. So usually they provide high dividend yield. On general, like what I shared earlier on, usually around 5% dividend yield, which is much higher than a lot of other blue chips stocks they are paying. Another characteristic is that they will borrow money. Okay, usually their loan amount is quite a large sum of money, but in Singapore it's very interesting. They are being well controlled. Okay, so the REITs in Singapore, generally they are measured by gearing ratio. Many of the REITs, they try to control the amount of debts they have by reducing the debt against the equity of around 50%. Okay, so if they go up more than 100%, usually people will find that the REIT is very risky. So they will try to maintain their gearing ratio between 50 to 100%. Okay, but even if the gearing ratio is between 50 to 100, the interest rate changes can have an impact on the company itself. Okay, because their earnings are really relying on very fixed rental income. But if there's changes to interest rate, the rate of return for them will definitely be adjusted itself. And end of day, to determine whether the share price will go up or not, there are a few factors. The first factor is definitely the rental rate. If the rental market for that specific industry, like for example, commercial market, if the rental rate is high, go higher, definitely the earnings can increase higher. Okay, can increase higher. But if there's a higher demand for retail spaces, retailers are doing well, the rental rate can also increase. So when they increase, then this will definitely help the REITs to perform a lot better. So they are very dependent on very specific classification, like how I classified earlier on, from offices to industrial spaces to even retail spaces or even hospitality spaces. Okay, so here you can be more specific in identifying what kind of sectors or what kind of situation can affect the REITs pricing itself. Okay, so these are the characteristics. I think very clear cut, very simple and straightforward in a sense, and that is the main reason why a lot of people we are very interested in investing in REITs. Okay, so I'll pause here for a very short moment before I talk about ETF, the third building block of a good investment portfolio. If you have any questions, please feel free to use the opportunity to ask me questions. Okay. So what's an ETF? ETF stands for Exchange Traded Fund, like I shared earlier on. So what is the Exchange Traded Fund? It's actually modeled similar to REITs. It's modeled as a mutual fund. In fact, ETF is being invented or being popularized much earlier than REITs itself. So like how mutual fund works, it pulls together numerous investors to invest in various kind of assets. Okay, so the difference between ETF and REITs is very clear. REITs, they only buy in real estate income producing properties. But for ETF, they can invest in all kinds of assets. Okay, all kinds of assets. So the key difference between ETF with mutual funds or even unit trust The key difference is very simple. ETF are listed on the stock exchange. Okay, they can be purchased or sold in stock exchange itself. Okay, now majority of ETF, what they do is that they will usually model towards something, but they will specify what kind of asset classes to invest in. Like for example, early ETF, they will track the indices. Okay, they will track indices. Like for example, the STI ETF, they will track the Straits Time Index, meaning you will buy and replicate the same kind of components in the Straits Time Index itself. Or maybe they want to buy assets. Like for example, one of the popular ETF is gold ETF. Instead of buying and storing physical gold bar, you can actually buy gold exchange traded fund, and you are actually an owner of the part of the gold that they store in their warehouse and in their vault itself. Or even other asset class. Like for example, there are also ETF that buys into all the different kind of REITs. Like for example, in Singapore, it's Lion Philippe REITs ETF, where they will buy a basket of different REITs to become a REITs index or REITs kind of exchange traded fund. Okay. And of course, there are also some very specialized ETF. Okay, we call them the inverse ETF, where they will use options, they will use some of the different derivative tool to help them to be wider spread in investing, or even to go against the market direction. Because usually when we buy shares, we are always hoping the share price will go up. But there are special ETF like inverse ETF where they will invest in options that bets the direction to be down, meaning if the share price of a basket of stocks are going down, you will be inverse in nature, meaning you'll start making money from it. So that is a very specific kind of specialized kind of ETF that's available in market. Okay, so you see ETF itself actually is a lot more complex in nature compared to REITs. Okay, you see REITs are actually very simple, very easy to identify, but ETF has already started to develop into a lot of different kinds of ETF. So the characteristic of ETFs is that people like to invest in ETF because you can see the current market price or the price of this ETF, because it's listed in exchange, it fluctuates all day as it tracks. Like for example, if it tracks the index, when the index start going out or dropping, the ETF price, the buy and sell price will also move together. So meaning you can get immediate quotation of the price of the fund itself, as opposed to mutual fund or the unit trust itself. And of course, ETF also can be very thematic. They can focus on different kind of strategies or even different kind of theme. Okay, so it can also contain all kinds of investment, which is very interesting, from shares, stocks and shares, to even commodities like gold, okay, or even oil, or even bonds also can be used to buy. Okay, ETF can also cover on bonds itself. So sometimes it can be local holdings, or it can be even an international kind of holding itself. And another characteristic of ETFs is that generally, because it buy a basket of different companies or different kind of investment, it usually brings down the brokerage commission. Okay, now for example, STI index constitute of 30 different stocks. Okay, 30 different stocks. So of the 30 different stocks, if you buy 30 stocks individually, you're going to pay 30 times of brokerage commission. But if you buy ETF, you only pay one time. So that's an advantage of what we mean by lower expense ratio. Okay, that's an advantage of ETF itself. So people like to buy ETF. Another reason is because it provides diversification, okay, at a very low cost, like what I shared just now. It can straight away can diversify into 30 different company. So now let's come to the pro and con. I think pretty straightforward because of diversification. It gives you access to many different kind of stocks. Not only different stocks, it can help you to focus on different industry or even specific geographical location. Like for example, the China SSE A50 ETF, you can have exposure to the China market. Or if you want to invest in US indices, you can actually buy SPY ETF, okay, which invests in the S&P 500 shares. So you can play more strategies to be reaching to different geographic location. Your portfolio can have wider exposure, not just focus on Singapore itself. Okay, like I shared earlier on, because of that, it offers low expense ratio and brokerage commission. And of course, the limitation or the disadvantage is this. Okay, if you buy ETF that is focused, or call it a single team focus ETF, the diversification is definitely limited lah. Okay, yeah, we have ETF that is limited to just only Singapore market. That means STI ETF. It's only limited to Singapore market. But there are some ETF that will be wider spread, looking at different teams itself. And another disadvantage of ETF is that some ETF are not as popular as some other stocks. Why? Because maybe people are not interested in certain geographic location or certain industry, so it can create some liquidity issue. Meaning it's like lowly traded, nobody want to interested in a stock to trade. So therefore, there may be some liquidity issue. And for specialized ETF like advanced inverse ETF and stuff, which require more active management, this kind of ETF, the management fee, okay, there's always management fee in funds, can incur higher fees itself. So when you come to ETF, you see there are disadvantages, but if you understand what kind of ETF you're buying, you can actually avoid certain disadvantage in the ETF itself. Okay, so there are really a lot of different kind of ETF. It can be pretty mind-boggling and quite complex. Okay, for some of y'all, if y'all want to see the shot, okay, you can take a screenshot using your handphone or even your computer. You can print screen on the different kind of ETF. Okay, but let me spend some time to explain the majority types of ETF that is available. Okay, one type is called the bonds ETF, where the bonds is focused. The ETF is focused in investing bond. Okay, the primary purpose is to provide some regular income. Okay, which can be calculated. Another type of ETF, I call it the stocks ETF. That means they specifically buy a basket of different stocks, but generally they are more thematic. Okay, meaning generally they will be using the country's indices to track on the indices. Okay, and the good thing about stock ETF is that it's similar to bond ETF. It can also pay dividend payout. Okay, because the basket of shares they buy, when the companies pays dividend, it can be distributed back to the ETF holders. Or it can be industrial theme, like for example, Lion Philippe, very focused on the REITs shares. Okay, it can be a very specific sector or industry. Or commodities theme, like gold ETF. Okay, it can help you to buy into gold without physical owning a share, someone to help you to keep safe the physical gold itself. Currency ETF, okay, there are currency ETF that there are different currency pairing of ETF that if you think that this pairing is going to increase in price and stuff, you can also use currency ETF to play a part. You don't need to have a forex account. That's what simply can be said. And of course, the latest one, which very new, is the Bitcoin ETF. Unfortunately, it's not listed in Singapore market. It's only new. I think last month or a month before, it's listed in the US stock exchange. And because of this has caused the Bitcoin ETF, Bitcoin prices to go up very strongly. Meaning, you no need to open a e-wallet, a cryptocurrency wallet or account to invest in Bitcoin anymore. You can just buy it like a share. Okay, so this will help to reduce a lot of transactional costs actually. Okay, itself or any other middleman. So these are the available ETF, very wide spectrum. It's impossible for me to specifically talk about a specific ETF itself. Okay, but do understand that within ETF itself, the complicated part comes in here. Within ETF, there are different strategy or different way of managing it. Okay, within it, it can be distributed into either passive ETF or active ETF. Passive ETF is usually aimed to replicate a performance of an index. That means there are already existing index that is running with it. But for active ETF, means that they're employing someone or a fund manager to actively manage the fund. Okay, or meaning when you actively manage a fund means that you'll be actively managing the asset itself. So there's a clear difference between active and passive. Usually active ETF requires a higher management fee, which higher management fee can cause the price of ETF to start dropping. But usually passive ETF is very unlikely that the management fee can cause the performance of ETF to come down. And within passive and active ETF, there are also more specialized ETF like inverse ETF, especially for active ETF. There are inverse ETF and leverage ETF. Inverse ETF means that, like what I shared earlier on, you can bet against the market direction. Or in other words, you can actually buy this inverse ETF to kind of short the market without actually using shorting mechanism. Okay, usually what they operate is that they will use derivatives like options and stuff to help them to price it in. Okay, and some ETF are leverage ETF, meaning for every $1 you put in, they may offer 2 times or 4 times. They mean they borrow you. They will help you to borrow 2 more times of money, 4 more times of money, so that there will be a multiple effect in profit, which also can be a multiple effect in losses itself. Okay, so now generally inverse and leverage ETF, generally they are under active ETF kind of management. So do take note, I want to share this is because there are really, really different types of ETF in the market, but we have to be very clear and careful of what kind of ETF is more suitable for you. Okay, so ETF itself is another separate topic, but in today's session is because a session to help people who are new in the market. I just want to expose you all to help understand that, okay, overall, there are really these 3 types of building blocks you can look at, 3 types of shares that we can look at in order to build a strong portfolio itself. However, these 3 is just a general foundation, general building blocks. But if you really want to spot market opportunities, you still need to eventually understand how to evaluate and analyze the market itself. Okay, but before I move on to share more deeper on how can you spot market opportunities, if any questions, please feel free to use this moment to ask. Okay, someone asked me for the slide. I'm afraid I cannot send out the slides. Okay, but someone asked me to show the REITs. Okay, the slides of the REITs. Okay, so I'm now showing you the slide of REITs. If you want to take a screenshot, please do feel free to do so. Okay, I'm sorry because of some agreement with the company. Yeah. Okay. Okay. So I would like to introduce the making investment course to you because there are a lot of other, once you understand the building blocks of the investing to build a strong portfolio, what are the necessary things to come to the building block is actually a thought process that you need to be trained. There are so many choices. There are so many blue chips. Okay, even I can give you characteristic. It is really, you need to have a process to trim down what are the stocks that we can look at. Okay. So the process is very simple. Every investor or trader should have this thought process, which I call it the complete investment process. But in order for the whole complete investment process to work properly, you must understand what you want in the first place. You must be clear of your investment objective. Why? Very often, what I notice is that investors or traders in the market, they only think about making more money, but they never think about why do they want to make more money? Because once you understand a purpose, then you can understand how to deeper and say, okay, so how am I going to make the kind of money? How am I going to, do I expect it to be a regular in nature? Is it going to supplement my income? Or is it I'm accumulating so that I can retire in future and so on and so forth? So you must clearly define the investment purpose. So in making investment calls, I'm going to help you to identify what is the real purpose of an investment, not just making money only. And not only that, we must also understand that everybody have different start of their life. So therefore, our investment budget is also different. How do we then set aside a proper investment budget for investing? Very often, a lot of people get kicked out of investment journey is because they put too much money into investing in the market itself. So when things goes wrong, they are totally out from the game itself. So therefore, it's important to set aside of the budget that is manageable. Once you understand your purpose and you know how much budget you have, then you can be clear to identify what kind of investment styles that will define your stock selection process later on. Okay. So the investment style as I follow. I believe in the market only two types of investment style. Either you choose to be an investor or trader. The difference between an investor or trader is very simple. Investors are those people who like to buy and forget. I call it passive nature. Traders are people who like to be actively involved in the market movement. Okay, so how do they make money? Investors generally make money through buy and hold. When you buy and hold, how do they make money? They make money through dividend payout from company. But for traders, how do they make money is that they want to make money through the price differences. I buy $1, go up to $1.10, I sell, I make 10 cents. That means you are trading in and out of market. So by clearly defining what kind of investment style that is meeting your investment purpose, then you can focus to adopt what kind of analytical style, fundamental analysis or technical analysis, or what kind within fundamental analysis, we can talk about income investing, value investing, growth investing itself. You see, different investment strategy also have different focus. Now, for example, income investing, I want to find stocks that give me consistent dividend payout. Or if you talk about growth investing, then I want to find companies that have very high earnings growth potential. So this will give you very clear focus to know what you focus on. But if you opt for a trader also can have three different kind of trading strategy. Either you can use trend trading where you buy, you hold on for a while until the trend is no longer uptrend, then you sell. Or you can do swing trading whenever the market forms a high and low pattern in the price chart, you can actually make the price difference itself. Or some people who are really, really full-time into trading a market, they can do intraday trading style where they, within an intraday, they can find very short market opportunities to make the differences itself. So once you understand investment style, then you can be very clear and specific in what kind of stock selection strategies that you are making use of. However, in making investment work course itself, it's impossible for me to go through all different kind of investment strategies that is available for you. But generally speaking, I like to put things at a balance. What I notice is that actually we can combine both fundamental analysis and technical analysis together. However, because I want to train people to make their investment work for them, so the analytical method will skew towards investor point of view. So when it's skewed towards investor point of view, then we will select stock using fundamental analysis most of the time. So in fundamental analysis, we will do two analytical process, which is called the financial analysis, which I want to understand whether the company is it financially strong or not, whether is it blue chip in nature. So it requires us to learn how to read the financial statement like the balance sheet, profit and loss statement, and even the cash flow statement. Once you analyze that, then you can have a strong understanding the strength of the financial standing of the company. Once you've done that, the next step process in fundamental analysis is to look at the company financial strength, compare with the market prices to understand whether the market is it trading overvalue or undervalue. I call this process pricing analysis. We should be learning how to use a set of financial ratios to help you to determine whether is it over or undervalue. So once you've done that, by the time, most likely you will be able to put this company or share into a watch list. So when you put this company into a share or watch list, the next question is that, so the current price can buy, but will the price go down further or will the price start going higher? That's where technical analysis have to play a part. Why? Because fundamental analysis has a limitation. It does not measure the market sentiment. Technical analysis is a study of the market sentiment. So therefore, we can incorporate technical analysis to help us to time the market. Where's the best timing to enter or even exit the market itself? So with this stock selection process, it is actually a more holistic approach in finding market opportunities, or even after you found your market opportunities, how you can use this to plan for exit strategies itself. So I'd like to quickly spend some time to share with you how we can use one of the things that we want to use during our making investment course is to use a stock screener to help me to find investment opportunities. Okay, so the primary platform we want to use to learn how to do fundamental analysis and technical analysis is by using Poem's trading platform. Okay, no need to be worried because Poem trading platform, if you attend this course, if you don't have it, we can actually sign up for the Poem's demo account. A demo account is free for 30 days. You can use it and they have all the functions available for you to use also. So let me do a quick demonstration on how to use this screener itself. Okay, so once you log in to Poems, you can actually click on this word tools, which is a tool that not many people use. Okay, but I want to showcase to you all, we can use this in the course itself. Everybody going to use the same thing, and we can use this to help us to filter out certain stocks of our requirement. Okay, so at this stock screener function, you will see that you can actually screen under different kind of industries. Okay, and not only screen different kind of industry, you can also screen different kind of market that you want itself. But one of the things that you can help you to identify blue chips company is actually by looking at the market capitalization. Okay, so here market cap is listed as per million. You can look at, I want to see company market cap is at least 1 billion. 1 billion is actually 1,000 million. So you can click search and you can see a list of stocks. Okay, minimum hit 1 billion. You'll see a total of 91 companies that is actually more than 1 billion itself. And I want to find companies that at least pay me dividends. pay around the T-bills rate. Let's say the T-bill is at 3.7. We can use dividend yield to search to further filter down the 91 counters to see, of the 91 companies, 61 result of the companies that pay more than 3.7 and it's actually more than 1 billion worth itself. And there are many other functions like financial ratios, all these we can use. For example, I don't want companies that are high debt to equity. I want companies that only not more than 50%. Okay, so I can even filter maximum of 50%. And then from a list will come out of only 6 companies. Okay, you will see that this 6 company is something that, hey, I can then look into it, put into my watch list, to look into a company's balance sheet, where, like for example, Venture Corp, you can click on Stock Analytics. Okay, you can look at the company balance sheet, income statement, whether the company is making money. You can look at the balance sheet, how much liability the company has, how much asset the company has. All these, I'm going to train you to learn how to read them in the making investment course itself. Okay, so tonight I won't be able to show you so many things. There are a lot of other things that we can put inside. But of course, some of y'all may want to think, hey, Jay, what about REITs? Can we filter out REITs? Answer is yes. Okay, let me reset. Okay, let's say I want REITs. I want to find REITs that have more than 5% dividend yield, because usually REITs are around 5%. So you can put 5% dividend yield, then you will see a lot of result, 155. Okay, so you can look at these names, like Asia Pay TV, AIMS APAC. Usually the name behind will write REITs. Okay, REIT, or even TR, that means Trust, CapitaLand Escort. All these you can see this as a REIT itself. Okay, so that's one way. This stock screener function really very powerful. We can use it to ease off a lot of time to watch the market. When people ask me, Jay, what stock can you buy? How do I derive that? I cannot be going through 700 plus stocks in Singapore market before I derive some specific stock to advise my client. I have to use tools. So in making investment course, you're going to learn how to use stock screener tool. What are the parameters that I should go in and key? Even if I key in the parameters, what are the key things that I need to evaluate, what I need to analyze? So that's why in making investment course, I specifically make a template for every participant, not a software for you to subscribe. No, I don't encourage people to subscribe software, but I encourage people to hands-on write down whatever observation or data, and I provided a template for everybody to replicate, so that eventually you can identify whether the company is it attractive or not attractive to invest in. But even if it's attractive to invest in, then there's also another template for technical analysis portion to evaluate the chart itself. So that is where the large chunk of effort and time for every investor or traders have to put in itself. Once you've done that, when you buy a stock, it doesn't mean that the whole investment process has ended. The last process that a lot of people forget or people ignore is actually the portfolio management process, which is the most important portion of investment. What do I mean by portfolio management? Very often, what differentiates a successful investor and an unsuccessful investor is actually the portfolio management portion. Unsuccessful investors have a tendency to be affected by their own illogical decision-making or even emotions itself. And what kind of situation will cause people to make mistake, make the wrong investment move? Selection process only? No, it's not the selection process. It's not about what to buy. It's also about when you buy, you have to ask a question like how much share to buy. And even if you know how much share to buy, should you be diversifying? You need to learn how to calculate how much share to buy and calculate how to diversify the shares. So at the process of buying, before you press the enter button, you must already have a plan. Once you have the buy plan, the next step is that you are a shareholder of company. How are you then going to monitor the share? Do I look at the share every day, or should I have a triggering point to trigger me to look? So you need to learn how to manage that also. Once you've done that, then you have to know when to sell. Why sell is important? Because if you don't sell, you wouldn't unlikely to have extra money to start to buy into another share. And who knows, another share can be a better company to invest in. And also situation, what if the performance of company did not go well and the share prices went down? Should you cut loss? All this you need to manage. So to encompass the whole process, what greatly affect is definitely what I talk about, the emotions. So you must understand what are the kind of emotions or irrational human behavior is before you can make very wise choice in the whole portfolio management process. That's why in making investment calls, I'm going to talk about this topic, very special topic called behavioral finance. Once you understand that, then you can properly manage your portfolio itself. So as you can see, I hope you understand the comprehensiveness of what making investment cost is about. It's not just about, just tell me what share to buy. No, you need to see as a whole picture. You need to know what share to buy, what price is a good price to buy. If you buy already, what should you do? After you buy, then when should I sell? It is a full process. So to break down the whole course, I break down into 3 parts. At part 1, we'll be focusing in selecting stock, where you learn fundamental analysis, which is a foundation for selecting stock itself. And during part 1, which will happen on 27 April, Saturday 9 to 6 over Zoom, you will go through a lot of practical hands-on to practice what you learn, like a stock screener I showed earlier on, and also learn the theory part of the financial statement and also the financial ratios in order to derive whether the company is attractive or not to invest in. So at the end of part 1, there will also be a competency test which is required by IBF, and this competency test will help you to reinforce whatever you learn. Okay, so when you're practicing what you learn, I forgot to say is that you're going to have a lot of hands-on session. We'll be using live market data itself. And between part 1 and part 2, it will be 1 week difference. So during the 1 week difference, what I will do is that I will give homework. One is a CQ e-learning, where you can go through e-learning with a quiz behind to help you to refresh what you learned in part 1 itself. And at the same time, I also give homework for you to evaluate a company. The purpose is that to show you that actually with the template that I give you can evaluate at your own time. Because ultimately, to invest in shares, you need to have your own confidence. You cannot rely on another person. Once you have gone through all this, on the start of part 2, we'll go through the homework and answer any questions that you have. After that, then we will be able to learn how to time the market using technical analysis. So it will happen on the 4th May, 9 to 6 p.m. Same thing, there will be a technical analysis template given to you on how to read the price chart, which will lead you to eventually identify where are the price point that I look to buy and eventually to sell using live chart data also. Same thing, there will be a competency test on part 2, and between part 2 and part 3, there will also be homework on technical analysis. And then at part 3, we will then focus on learning how to manage 2 things, manage our behavior and manage our portfolio, where we'll learn all the different portfolio management techniques. And to end up for the whole session, which will end on 11 May, Saturday, 3rd Saturday, there will be a finale case study for you to wrap up what you learned in part 1, part 2, and part 3 together as a whole. And this will become a competency assessment for you also. So rest be assured, making investment courses are designed in a way that will help you to learn progressively, especially through a lot of hands-on session, which using live examples itself. And lastly, I also strongly believe that learning is a continuous thing. Over these three parts, it's impossible to learn everything. So therefore, I created a learning platform for everyone, which making investment courses through Cybercode created an app called CQ Station, where I will share with everyone any questions that you have, any concerns that I can reply. And also every month, what I'll do is that I'll also share my monthly market opinion. Okay, I'll review the market together and I will do evaluation together with making investment work graduates itself. At the end of this course, you will receive an IBF certification, okay, of completion to help you to find possible jobs in the financial industry itself. So how's the course fee? Making investment cost is at $1,962. It may sound high, but don't forget, IBF is there to help you. They will be subsidizing for Singaporeans above 40, 70%, which eventually is only $700 and $702 only. But if you are Singaporean below 40 or Singapore PR, you'll still be eligible for 50%. And the remaining amount you can pay by cash, check, okay, or pay now. And if you still have skill futures credit, you can use skill futures credit to offset the amount, or even using NTUC UTEP funding. Eventually, there is a potential for you to pay only $0. Yes, potential for the cost to be free, as long as you have enough skill futures credit or even UTEP funding. So with this, I want to encourage everybody to strongly consider to sign up for a course because there is a potential for $0. And later I'll get Andy in to advise you how you can be possible to be at $0 and how you can sign up for this course. But before I pass the time to Andy, I hope that everybody understand that what I really want, okay, is to help every individual to know the proper foundation, especially for those who are new in the market, to avoid the pitfalls of investing. So what I can do is that I want to offer a bonus. I want to offer my personal time to do a one-to-one private coaching after the course itself. So whoever sign up for the course, I will make arrangement with you at my own personal time, or even I can even buy you a cup of coffee over the session to go through with you if you are existing position, or if you have interested in any stocks, we can go through together to evaluate so as to build further confidence in your own investment analysis. So nevertheless, making investment course is a very comprehensive course that is at a low cost that is supported by IBF. And eventually, if you have a lot of skill futures credit or even NTUC with that, you have a potential to attend a comprehensive course without paying a single cent. So with this, I want to encourage everyone to take out a home phone, turn out the QR code reader, and scan this QR code. Okay. So before I pass the time to Andy, let me see, got one question just okay. Okay. Not the REITs action, before the REITs first half. Yeah. Okay. Yeah, first half of the slide, I think it's just only the blue chip, three things I'm talking about, blue chips, REITs, and also ETF. Okay. So yeah, if you want to find out more session, please to follow Cybercode's Facebook page, because next Tuesday night, okay, I'm going to do the same session again. Okay, if you have missed any information, please do drop by at the same time and come back, watch your Facebook live, and then you can see the whole thing again. Okay. So with this, I thank you everyone for joining me for the past 1 hour plus, close to 2 hours. And I would like to encourage everyone to know how to make an investment work for them. And with this, I thank you again. And I would like to pass the time to Andy. Andy, please.
Oh, hi. Yes, Jay, can see me and hear me well?
Yes, Andy.
Okay, cool. Thank you very much, Jay, our wealth manager. Yes, thank you very much for those who stay out for close to 2 hour session. Now, indeed, like what I mentioned in the beginning of the opening speech, like you stay throughout the end of session, definitely you're going to get something. We just, Jay, our wealth manager, just share with all of you here. Potentially, you may come out $0 from your wallet or from your purse to join in for making investment work cost. Now, earlier on, I also shared with all of you here, I would like to bring a little bit history of making investment work cost. Actually, making investment work cost is one of our pioneer course. Jay Chia, our wealth manager, teaches this course even right before IBF subsidy. That is easily in, I think this year will be stepping into the number 10 or 11 year of this course already. Last time when before IBF subsidy, course participant got to pay full course fee. That means you got to pay everything by your own. You know, it's just only that like last 4 years when this COVID pandemic come in, then IBF come in to assist the local citizen and PR to do a pre-fund model. That means straight away you can just as long as you fall under eligibility, you just pay the remaining. Okay, so that is the history of making investment work cost. So to let all of you know that in fact this course has been running easily more than 10 years already. It's one of our oldest course, one of the most prettiest course, I think easily more than 10 over years, and as of time start until now. Now again, very important to also take this chance. I think Jay, our wealth manager, are very generous, right? For those who are joining via Facebook Live, for those who are still within Zoom, please stay on for the next 5-10 minutes here. Definitely, I'm going to share with you. You can get a lot of goodies. Now you see, we have Skill Future Credit, we have UTAP funding, and then we also have one-on-one personal private coaching session. Now, bear it in mind, this private coaching session is a physical session. Remember, Jay mentioned buy you a coffee, right? Because buy you a coffee cannot over the Zoom, right? Okay, it need to be meet up in physical session. So I just typed the message to everyone in the chat. So this physical session, it will be arranged by Jay after the class. Because the last day of the class is on 11 May, right? So it will be after 11 May, and then Jay will be in contact with you, right? For this private coaching session. Actually, if you ask me, if you really do ask me, right, this private coaching session is already worth a couple of $100 already. Why is that so? Because Jay meet you in person, you know. It's like one-on-one, you know. So one-on-one in the market outside is like easily, it's just like for those who are children, you get a one-on-one coaching, a tuition, you know, to pay to tuition tutor, right? You pay a very premium price, right, as compared to a group of 10 or 15, you know, right? That's the reason why I say this one-on-one coaching is already worth more than, you know, easily more than $300 to $500. But this session, it will be provided to you as complimentary if you sign up today, only today, for this making investment course for the April batch, which is the batch 2, which just you can see on the screen, 27 April, 4th May, and then 11 May. So this is the three part 1, part 2, and part 3 session. It's all 3 Saturday, and this 3 Saturday will be over Zoom training, setting. It's just like what you're enjoying for the last 2 hours, close to 2 hours, right? So earlier on, I think Jay also mentioned a little bit of administrative. You need to ensure you have a PC to join for the class. You got to turn on your PC webcam, and this is also part of the requirement set by the IBF, right? Following through, or those who has been attending any of the IBF courses, whether with Cybercool or with any other place, the training provider in Singapore, you require to turn on your PC webcam. That is a requirement. Okay, so that is something that to take note of you here, right? And then of course, also earlier on, Jay also mentioned, our manager also mentioned, there's some competency tests that need to be carried out during this part 1, part 2, and part 3 session, which is 27 April, 4th May, or 11 May. Okay, I think earlier on someone asking about it. The question, Jay already helped me to reply. So please join in. You miss out the session, please join in next Tuesday session, right? Or if not, you can send in your email over to later part when the session end. I'll send a thank you email. I will send a thank you email. You just reply me with thank you email, then I will send you the Zoom link for next Tuesday session, which is what Jay just shared with you earlier on. I think next Tuesday also in the evening, the same timing. Same timing will be start from 7 p.m. and end around 9 p.m. Okay, I would like to go through with all of you on a couple of things. More importantly is the Skill Future Credit. Now, I think Jay did mention, right? Potentially you pay 0, right? because if you join in as a citizen, right, at age 40 years and above, then you will be eligible the 70% cost fee subsidy, right, which is 1,260, and then the remaining cost fee of $702. So if you're a citizen, you're age 40 years and above, you have your SkillsFuture credit. You can use the SkillsFuture credit to pay for it, which is I'm going to sign in with my personal SkillsFuture credit account. I'm going to run through with all of you here how to go about the payment. Okay, so for those who are a first timer to use the SkillsFuture credit, please pay attention for the next 3 to 5 minutes. Now, of course, for those who are already quite seasoned to use SkillsFuture credit to make payment, you can click on the link provided in the chat. I think there's a 2 separate short link has been sent. You click any of the link, you come to the registration. Okay, so let me just do my portion on the share screen first, because I need to show you. Wait a minute, okay. I need to show you the screen. Yeah. So this will be the this will be the, just want to make sure that I can see my screen. Okay, yes, can see my screen. Okay, so this will be the batch 1, sorry, it should be batch 2, apology. So the date is the same. So you see over here, there is a short link there, right? There's a 2 short link. I think I sent around what time? I think I sent around 8:45 p.m., just about 10 minutes back, right? So you just click on the link. Click on the link, because this is an online class. So online class, that means that you need to submit the registration form, everything in soft copy is through online submission, okay? And therefore, for you to submit the course registration form, and you need to be all through the online submission. So when you click on the link, you'll route to this page, name, a quick name MIW, stand for Making Investment Work, in short MIW, course registration form 2024. Okay, so you come to this interface, okay, and then you click on selection of course date, and then there will be drop down, there will be appear only one course date appear. There is an online session on the 27th April, 4th May, and as well as 11 May 2024. So all these 3 days is on Saturday, and timing start from morning 9 a.m. and end around 5 p.m. in the afternoon. Okay, so it's a consecutively 3 Saturday or last Saturday of April, first Saturday of May, and then second Saturday of May. So it's a 3 session. It's all on the Saturday. Okay, select on this, and over here you can see there's a detail of applicants, right? And you can see there's a with the asterisk, right? So those with the asterisk is a required field. Please fill up. Okay, and then over here you can see there is a declaration. You got to declare that you're a self-participant and you would like to make the cost payment for the cost commencement, because we're going to send you the training material. The training material is still in hard copy, okay, for information. So we will prepare as a training provider. We will prepare the training material that is based on payment made. So if you submit the registration, you have not made payment, then we are unable to send the what call this the training material over to you. So make sure you do the registration at the same time. You also make the cost fee payment, whether by SkillsFuture, PayNow, PayLah, or online payment. Okay, so you select on the self-pay individual, and then you move all the way down. Here we explain like what Jay explained to you earlier on. Okay, so I don't want to go through it anymore. Now we go through all the 4 payment modes, right? So we have first payment mode is SkillsFuture credit, and then we have Visa Master, and then we also have PayNow, as well as we also accept PayLah. So these are the total payment, 4 payment modes, right? Now, of course, SkillsFuture credit, it will be for citizen, because as a citizen, you have your SkillsFuture credit, then you can use SkillsFuture to make the payment after the IBF subsidy. So which means the 702 or the 1062, you can use SkillsFuture credit for local citizen, right? Which is I'm going to sign in with my personal account to showcase to all of you. Okay, so you select the SkillsFuture credit, and then you click here. Beside there's a SingPass slot. So to ensure you have your SingPass ready with you, right? So I click here. So once I click here, it will route to another page, and this page will appear. It will showcase the cost detail, right? And it will be in the landing page of the SkillsFuture page, Making Investment Work course. So you can see our course is already captured in the SkillsFuture portal. So as you can see, this is a SkillsFuture landing page. Okay, so over here you capture the course name, you capture the company, and then as well as you capture the full course fee. Okay, so click on the e-services, and then it will come out another it will drop down 5 boxes. So under the first box, there's a check and claim SkillsFuture. So I click and check and claim ski future. Immediately you come up on the top right corner, there's a welcome page, right? So I click on this. So this is the time I will get ready with my smartphone, right? Because when I click on this SingPass app, right, at the same time I'm going to launch a SingPass app in my smartphone, in my mobile phone, right? So I got to scan in to approve. Okay. So in order for me to sign in to the ski future portal, okay, to make the payment, right? So another 10 seconds or so, you should be able to see that my personal ski future credit account appear here, right? So you can see this is my personal page. You can see my names appear, and underneath I have a credit balance. So for first timer who are first time to start using ski future credit, you're not too sure the ski future credit, and also a lot of people also not aware the ski future credit it comes with expiry date, which is quite true. It comes with expiry date. So where is the expiry date they listed to? So I click on the forward symbol, then I break it down. I'm able to see all the dollars I have. Okay, definitely you can see here. Out of the, if you are above 40 years old citizen, you get total 1,005, like what I get right now. Okay, so if you are 25 to 39 years old, you only get if I'm not wrong, you only get the first and second. The third one you will not get. Okay, so the older you go, the better you go. I think as you all know, I think under the budget, the parliament budget announcement by DPM Lawrence, there will be another additional $4,000 of the ski future credit will be dispersed to Singapore citizens aged 40 years and above, right? So that is actually in the month of May. May will do the disbursement. So far, we have not known that whether the $4,000 can be used for financial costs, because ski future they also have, they will set the different tier. It's just like now this 1,005. Out of the 1,005, you can see the red color, the add-on ski future credit. This add-on ski future credit, you can see here, they give a special asterisk, right? It's only for selected courses only. So if you already use up first and second $500, right? Then you may have to use Pay Now, Pay Later to make payment, because so far this last $500 cannot be used for financial costs. But most of people, they are not even use the first and second $500. Okay, so then definitely you can. Okay, just to let you know, this is the expire. So you can see here it's very soon. It's very soon. Definitely I'm going to use it as well. I can see here this the second 500 and the third $500 going to expire by 25 December 31st. Is about a year plus from now. Okay, so I need to submit, right? So I click on the submit a claim, and then I mouse to selection of course to submit claim, and this is time I key in the course name. I key in the course name, making investment book. All right. Okay, so for me to key in, yes, correct. Key in the second words appear. I just select it. I click search. Right. Once I click search, you come to this page. You can see the course name, course ID within the box. So I click on that, select. Right. Once I click on select, the next page, got to key in. I got to select the course start date. Okay. So I click on the calendar provided. I mouse over to April. Click on 27. Then I click next. Okay. Once I click next, you come to this page, right? Okay. So you can see on the left side, you can see the cost detail. So on the right side, there are total 3 columns you got to provide. There's amount of credit to claim, and then there's a fee payable by you, including GST, and then of course you also got to upload the supporting document. So where to get this information from? So earlier on we did mention, right? So if you're a citizen below 40 years old, this is the amount of credit to pay, 1062. So if you're a citizen age 40 years and above, and $702 would be the fee payable. Okay, so let's say I'm above 40, so I key in 702 under amount of credit to claim, and then I key in 702 under the fee payable by including GST. Then at the same time, I also got to upload the supporting document. So where is the supporting document? Now, so supporting document will be this form. We call MIW course registration form 2024, right? Because this is an online class, you got to submit the form, and then you got to attach to the skill future portal, right? So as for the skill future portal can capture the supporting document. Okay, so you select on this date, then fill up all those required field, and make sure you stay on self-paying teacher review button, and then move all the way down. Then you select the skill future credit, and then click submit tab. Once you click on submit tab, please do check your inbox. So there is a auto reply email sent to you, via email, right? That email itself, you capture that will show proof to you have successfully registered a seat for the course, taking investment course. At the same time, it will also provide the supporting document in PDF format. So when you receive the supporting document, please save it into your local drive, because that form you'll be using as a supporting document. Remember, please make sure you save it in your local drive, right? Then you come back to the link I just mentioned, and then you go and click browse. Once you click browse, let's say you save it under desktop, and happen to be, let's say this is the file you have saved there, you just click open. Once you click open, next 5 to 10 seconds or so, so your file will be basically uploaded, right? And then correct, quite fast, huh? Okay, it will be in PDF format. And then before you do a submission, you click on the review. Okay, review a submission to ensure everything you key is in order, cost detail, payment details, and as well as the supporting document, right? Make sure you upload the correct file. Everything in order, then you click on the read and agree to the SkillsFuture credit terms and condition, and then you click submit. So once you click submit, the next page will appear pending for approval. So you see a word pending for approval, that means you have successfully submitted SkillsFuture claim, and then your job is done, right? You need not do anything. Okay. So when the class start on the 27th April, you debit the amount from your credit. Okay. So this is for SkillsFuture. Okay, so let me just go to sign out first and go to the other 3 payment types. Right? Just understand there are some of you may use, you may have, I mean, for local citizens, you may use up your SkillsFuture credit, and then you still fall under the 70% subsidy as well as the 50% subsidy. Okay, so we also accept Visa, PayNow, and PayLah apart from the SkillsFuture credit. Okay, so let's say Visa and Master, I click here, and this will be much easier, because this payment gateway will be managed by our backend system. Okay, so under the cost, you click the drop down list. So there's quite a number of costs. You just mouse over to making investment work cost on the center, right? And you auto capture the date. And same thing, let's say if you are above 40 years, you'll key 1702. So if you are PR, you'll key 1062. Okay, then order note, just key in MIW. Okay, the short form for making investment work. Then the right side, you see there's a billing information. This way you can fill out all the detail, your name, email address, because like I said, the training material is still prepared in the hard copy. It will be arranged, it will be prepared, and then it will be couriered over to your billing address based on the course payment made. Okay, remember, based on the payment made. So if you have not made payment, you submit the course, then of course we will remind you, we'll call up and send email to remind you to make payment. Okay, so of course the best is to register, also make payment, so you will not forget, you will not slip on your mind to make payment. Okay, so fill that requirement and then go to next. When you click on next, the next page will appear with 2 interface, the Visa card interface and the MasterCard interface. You just select either of the interface, or I mean the payment mode. If you select Visa card, then key in your Visa card detail with the expiry date, submit the claim, then submit. And once you submit, there will be a one-time password sent to your mobile phone. Once you submit the one-time password, it will be straight away debit from your bank. And then same apply for the MasterCard. Now also, we also make it much easier, especially for local citizens. You do receive your government grant through PayNow with NIC. Likewise, our course also can use PayNow. Of course, our PayNow is to the company. So you can see it's PayNow with UEN number, right? UEN is that for our company unique entity number lah. In short, they call UEN number, right? So first thing first, you have to make sure you link your PayNow account to any of your 4 retail bank, UOB, OCBC, DPS, or POSB. Okay, these are 4 of the local retail bank you can link your PayNow account to. Once you link it, right, then you go and launch your online app. Okay, sign in your online app. Okay, and then click on the code, the PayNow code. Once you sign into your online app, you select PayNow and then you scan this PayNow code. Once you scan this PayNow code, you appear, it prompt you to key in company name, cyber code, cost name, making investment work, cost fee payable 1062 or 702, and then last but not least, you're going to key in the bank, and then there'll be payment acknowledgement sent to you, to your mobile phone and to your handphone. Same apply for PayLah. Of course, PayLah will link to your DBS or POSB bank. Okay, so these are the total 4 payment selection that you can see over here to showcase to you. Okay, So let me just quickly come back to the slide. And also, if any of you do have question, I think now it's about 9:08. So I'll open up another maybe 6 to 7 more minutes to 9:15 p.m., right? So if you do have any question pertaining to the course registration, yes, please take this last 6 to 7 more minutes before I'll end the webinar session. So let me just repeat again. Yeah, also let me just explain to go through you on the NTUC UTAP funding. Okay, so batch 2, sorry, I think just now I Saturday, 4th May, Saturday, and then 11 May also Saturday. So it's a 3 consecutively Saturdays, and timing start from morning 9 a.m. and around 6 p.m. for each of the Saturday, correct? So you need to have PC laptop to join for the class. The full course fee 1962 with GST, then this will be fee. Okay, now interestingly, people will say, I think earlier on, Jay also mentioned, you can even use NTUC UTAP funding. Now, how does it work? Imagine if you first you have to ensure you have your NTUC, your NTUC membership is valid. So you need to be an NTUC member first. That's the first criteria. And second thing, second criteria is you have to make sure your membership is active. That means you're still you're still paying the membership fee. Okay, then you're eligible. Okay, but how does it work? So let's say you fall under this tier, citizen below 40 years old or PR for all ages. 1062, you're going to pay to Cybercode using PayNow, PayLow online payment, right? And then you only claim back 50% of this fee, which is about 536, is it? 500 odd, you can divide by yourself, from NTUC after the course completion. That means you only can submit the claim to NTUC starting from 12 May 2024 onwards. Okay, that is the different claim process between NTUC and SkillsFuture Credit. So common question people will ask, Eddie, I also have, I'm a citizen, I have SkillsFuture Credit balance. I also an NTUC member. Can I use both payment? So my reply to you is a big no. You can use either one only. So you either use a SkillsFuture Credit or NTUC UTAP. Now, obviously, if you ask me, SkillsFuture Credit, it is still the best choice because this credit is given to you already. You're using this credit to make payment, right? Unlike for NTUC UTAP is, you're going to pay to training provider to us, to Cybercode, and then you claim back from NTUC after the cross completion. So this is the major difference between these two payment system, SkillsFuture Credit and the NTUC UTAP, okay, the UTAP funding, okay? So similarly, if you're citizen age 40 years and above, then this $702, you decide using NTUC UTAP, 702 you're going to pay to Cybercode using PayNow, PayLow, online payment, and then you only claim back 50%. I can just do a calculation for you. So for those under 1062, so you can claim back 530. You can claim back 530. You fall under this tier, citizen below 40 years old and permanent residents, you only can claim back $531 from NTUC UTAP, NTUC after the course completion. And remember, you to claim within 60 or 90 days. I think even now it's a 60 days. So they also set a timeline. Okay, so you remember to claim. You forget to claim from NTUC, then it will the date is already exceeded their expiry date. Then you may not be able to claim back from NTUC. Okay, so there's a difference, right? Now, if you're a citizen above 40 years old, 702, right, you can claim back 351. Okay, after the course completion. Okay, same thing lah. They mean after 11 May, the completion of the class. Okay, now over here you can see I also provide my contact. Okay, and as well as the email that you can reach us, right? Of course, this contact that you down, right? You have to press 1, you reach my mobile directly, or you can send it to support@cybercode.com.sg also, all right? Also can, right? And then our colleagues, our back-end colleagues will forward the email over to me to reply to you also. Okay, so bear it in mind, this is the time that you can get a personal coaching session. So what is the takeaway? Why is it so different as compared to other courses? Because you are attending a course from quite a reputable training provider in Singapore, Cybercode, in fact, this year we'll be stepping into 28 years of the experience, right, in providing the investment and trading to the retail investor and trader, okay? And you're learning from the accredited IBF trainer, chia, okay, or wealth manager. You're learning a fundamental and technical analysis, VATA system, equity investment system. You're learning the behavioral finance, the software, the psychology that what this Jay just mentioned. So you're able to enjoy the one-on-one person coaching sessions. This will be the physical meetup session with Jay Chia, right? And then you also, after you complete the class, the theory teaches you in practical, and then in the scoring system, as what the Jay just shared with all you here, and can use it to apply it practically after the course, right? So it's a hands-on practice that you can use it, logical approach to the winning strategy, and then the skill that you learn, you can use it after the completion course. You can use it for your own stock investing. So these are the key takeaway. These are the key takeaway. Okay. So any other last question? Right. We have another 1 more minute to 15 minutes past 1/4. Right. So now it's about 9:14 p.m. So any other last question before the session? And of course, like I said earlier on, for those who join via Zoom, right, and definitely we have your email address. So when the session ends later, I'm going to send a thank you email. With the thank you email, I also will copy the registration link of this batch 2 making investment work course. So if any of your friends who miss out for tonight's session, not to worry, you can just help to forward the old email to your friend, he or she, then he or she can do the registration from the link, because there will be a course registration link as well, right? And also I will also attach with the step using the skill future credit, so as well as the NTUC UTAP guides, right? Happen to be your friends at NTUC member, they also use the NTUC UTAP to pay for it. I mean, to pay first, then they can claim from NTUC Corporation Limited. Okay, these are the things that I would like to just share with you here. You can maximize it, you can use it. Don't wait until this coaching session is end, because this personal coaching session is only for tonight's session. I mean, of course, let's say if you have happened to forward over to your friends, I can talk to JCL or wealth manager. We still can able to make exceptional for your friend. Okay, so please do as quickly as possible, and preferably by tomorrow, because when the session end later in a short 1-2 minutes time, I will when the Zoom end, I'm going to send a thank you email. Then you can quickly forward over the email to your friend and quickly get your friend to register, right? And also make payment, so as for your friend to entitle to enjoy the one-on-one personal coaching with JHR Wealth Manager. Okay, so this is something that I would like to encourage all of you to do that. Okay, so making investment course by JHR Wealth Manager. So these are the dates state here. Scan the QR code, but not just mount over to the chat. There's a link that's been sent to everyone also. Okay, so I think more or less we come to the end of the session. I think since we have some time, right? Allow me to do this thing, which is what I always do. Yeah, good. We have this, yeah. In fact, earlier on, Jay already did that already, but I think, okay. So Jay earlier on also go through this course outline. Okay, so these are the course outline you're going to learn. Okay, so I just copy to everyone in the chat. Okay, and then you also can see there's a program objective, there's a learning outcome, right? It is very interesting. Okay, I copy this, I post it here. You also can get to know. Okay, in fact, this is the actual class that we conducted. Okay, actually during the COVID time, as in the year of 2020, right? So we also played earlier on in the opening speech. Let me just replay one more time. So this is a physical training session. We conduct it as this lifelong learning institute at Paya Lebar. So as you can see, Jay with the face mask on, the training, all the trainee, all the course participants also with face mask on, with the spacing of 2 meters away. So because that is the time that during the COVID time, we have this physical class running, the same course we call making investment course. Let's hear from this video then. Okay.
So when I came upon this topic on called behavioral finance, I started to realize that the crux of a successful investor or trader is not about selecting stock. It's about managing the portfolio of stocks they own. We manage the risk, not only just managing the risk, we also manage the psychology of ourselves. The only best way to service the client is really through a standard process, guidelines, and also to understand what the client really need and ultimately end of the day. And this will generally help clients not only to provide the best service for clients, but also to help clients to gain wisdom, knowledge, and getting the best investment position for themselves. So that this is what I do. The perfect strategy to me is a unique strategy that fits to the person's objective and wants.
During this class, Jay actually shared a lot of his personal experience and made certain concepts very clear to me. Like what is a trend, what is a momentum, causes actually help me to understand the technical analysis and also the fundamental side.
He's able to convey very effectively the substance and the knowledge. I find him very pragmatic and his approach is very prudent.
Join my course and learn how to make your investment work for you today.
So basically, these are the videos that the class that we completed in year 2020, exactly 4 years from now. Yeah, as we all knew that I think in the June second half of 2020, okay, almost close to 4 years already, right? Because COVID is happening on the April, right? April 2020, right? Okay, so we are starting the number 4 year of the COVID. So this is the time that actually we conduct our class. As you can see, the face mask on, we still conduct it, and Jay would like to do it physical, right? So the one of the testimonials are saying that actually it's a practical class. It's a very practical class that you go through stimulating. It's a practical class, okay? So let me just quickly come back to the slide, and then we will end, right? We'll end the session because now it's about pushing 9:15. So thank you very much for all of your time, and then we hope to see all of you here join in for our Making Investment Work course, which is happening on the 27th May, 27 April, 4th May, and 11 May 2024, and which is about close to about a month from now. Okay. So with that, I think would like to take this chance to thank you all joining for tonight's session, and we looking forward to see you then in your upcoming class on Making Investment course. And I wish all of you great success in your investment journey, and looking forward to see you then. Thank you. Bye.